Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of February 5th, 2018. Well, boy, there's a lot to talk about for the market. Last week was exciting to say the least. Biggest drop, biggest one-week drop, and biggest one-day drop since 2016. So it's been a long time. If you watch the news, I'm certainly a news junkie, and if you watch the financial news and stories being written about what happened in the market last week and what's going to happen, uh, uh, a lot of digital ink is being spilled with people offering all kinds of opinions, ranging from this is it, this is the big one, it's starting, the correction is coming, and you need to run for the hills, to hey, this is a great buy on the dip opportunity, and everything in between. I'm a technical trader. I trade based on what's happening on the charts, but of course I pay attention to what's going on with news and information that is going to impact market participants. I liken financial forecasts and market forecasts kind of to weather forecasts. There's some indications and some information that would cause you to change your behavior a little bit and be ready. If there's you look at the weather maps and the forecast, and it says it's going to rain, and you look outside and it's overcast, then you take an umbrella with you. But you don't actually open your umbrella when there's no water falling out of the sky. You open your umbrella when it's actually raining. And I think the markets are the same way. You can be prepared for events in the market and have an idea, an opinion about what's going to happen, but you act on the reality of what is actually happening. Now I'm showing the 10-minute chart on the SPY, the S&P 500 ETF. And last Wednesday, right after the FOMC announcement came out, we saw, after the entire year, a big strong move up, uninterrupted, and then, a drop and some consolidation, and then right after the FOMC meeting, the market breaking out of this area of consolidation and starting to head down. So we went short the SPY in my live trading room on Wednesday, the 31st. We stayed with that trade through the first, and then we were there for the big drop on the second on Friday. So we had a really nice trade. We got short SPY at 281.78. We had a target set in the middle of a Fibonacci retracement zone. So after this big run up, we saw this beginning. We just measured that with the Fibonacci retracement tool, and the retracement zone was between these two blue lines here. And here we are right in that target zone. So of course we're in really nice profit on this pullback on the S&P 500. But the big question, of course, is what's it going to do next? And I'm going to offer some insight on how to watch for that and to see the reality of what's happening, and be able to trade that. So like I said, this has retraced into the expected Fibonacci retracement zone after the big run up and after this move down started. It's in the target zone. So this could continue. Fibonacci retracements can go clear down to 76.4 and still be a legitimate correction to this move, with then a continuation of the original trend expected after that. So this could continue down to a level of about 271 on the SPY and still just be a short-term correction on the 10-minute chart. Key thing to watch for will be the overnight futures, which are going to open. I'm recording this video right now. I'm going to pull my futures chart over here. I'm recording this video now on Sunday. It's 1:37 Pacific time. So in about an hour and a half, the overnight futures market is going to open. This is the S&P 500 futures market. You can see here's where it's closed Friday. So if the futures markets open and gap down and continue down, that's going to be a clue that there's going to probably be some follow on the open on Monday. If, however, we see some move up, we would want to watch that very carefully. And on this SPY chart, what we would be looking for, if we get a move, something like this. Let me get my pen out. So if this, overnight, if this thing pulls up and does, it doesn't move in a straight line, but if it does something like this by Monday's open, then this would be an indication that the trend has changed, because a downtrend is marked by lower lows, lower highs, lower lows, lower highs, lower lows, right? A change in trend would then be a high, higher low, new high. And that could indicate that this move down is over. And if it is over, then what we would be looking at is then a continuation of the original trend, and it would, do something like this, get my extensions on, and it would continue up into this zone above this green line here. If it continues down, however, if that does not happen, and it continues down, get the pen back, and just continues putting in lower lows, lower highs, lower lows, right? Watch this key level here that we called out before, and if it goes below it, this could be an entirely new trend that's going to continue on with some velocity and have some trading opportunities to the downside. We're still short this SPY. We're going to be watching. We've got our stop equal to the target, so if price goes above this, we're going to go ahead and get out. So those are some key levels to watch. See if it continues down. See if it goes down through this level, or if we have evidence, like I talked about, of it turning and then heading back up, and that would just be, normal price movement, giving back a little before it continues up. To get a preview of that, the reasons given in the press, and I think they're pretty good, pretty legit, are the reality of the bond yields going up, and here's the 10-year bond, right? This is definitely heading up. Let's get rid of the ad. Definitely heading up. If this continues, that could have an influence on the indexes. And then there's concern about rising wages and the specter of inflation, and then the Fed raising rates, and then it's more attractive to go put your money into fixed income and start pulling out of stocks after this long run up. That's all pretty speculative. It's pretty far out in the future. So let's watch the actual market reaction, and again, watch those key levels. Again, in an hour and a half, the futures market will open. It'll be interesting to see if we do gap down and continue with some velocity to the downside, or if things pull back up and set the stage for what may happen on Monday morning. That's a lot of what ifs, but that's trading. There's no guarantees, and nobody knows what's going to happen. There's some realities to watch and then trade accordingly. Of course, in the live trading room, we're going to be watching that very, very closely and trading accordingly. Based on what the market's going to do, getting out of this trade. Maybe there's a move to the long side coming that we could take a long on then and take the next leg up, or we could stay in this short and continue it down. There might even be new entries that announce themselves, and we'll be taking those trades as well. So I don't have a crystal ball. I can't tell you what it's going to do, but I can, and I think I've given some guidelines about how to tell what it's doing and what to expect next after that. So hopefully you found that useful. I welcome your comments, your feedback as always. I'm now showing the gold futures on a 10-minute chart, and I think having some really short time frames for this point in the market is appropriate. So gold had a pretty big sharp drop. You can see it's already consolidating, and if we could see the indexes continue, there may be a flight to quality, and gold could take off, and that could be a really interesting trading opportunity as well. You can see gold here has found a bottom and is starting to show signs. See, this is a higher low, didn't go lower, and good chance it's going to break through. And if the index futures continue down, again, we may see money moving over to gold and a move up in gold. So that's something to watch, something to be really, really interested in. Oil has kind of the same situation as gold. Big drop along with the rest of the market, but then a move up, broke through the Ichimoku cloud, pulled back to a higher low, didn't go make a new low like the S&P did, and now it's finding some support and may continue up. So if the indexes continue down and open down with some momentum pretty quick here, and gold goes up, oil may go up as well. So there may be some trading opportunities there, some real volatility in the markets. Kind of fun times for traders on shorter time frames. And again, no crystal ball. Can't tell you what it's going to do, but I can tell you the signs to watch for in the trading opportunities that may present themselves. So it will not be dull. We got big earnings coming out this coming week, and earnings could certainly add to the emotion and momentum of the market, up or down. We got Disney coming out on the 6th, Tuesday the 6th, Tesla on the 7th, Activision on the 8th, Nvidia on the 8th. So those are some really big names and may give the market some direction and some impetus for movement. Well, thanks for tuning in. I wish I had a crystal ball and a prediction. It would make trading easier, but again, we got some things to watch for, some key levels, and we're just going to participate in what's really happening. If it starts to rain, we'll open that umbrella, and if the sun comes out, we'll put it away. and have a picnic. All right, take care. Thanks, and we'll catch you on the next update. Bye.